Welcome to the first update on Pharma Fund investments. Last week we had discussed about opportunities to invest in the pharma sector as it is getting strong. You can have a view of that video using the link above. We had discussed about 3 funds that are suitable for investment in the pharma space. It's been a week since that discussion was made. Let's look at how those investments would have panned out if we have taken the call. In that discussion, we had also talked about short and long-term investments. Short-term means it is being tracked every week, and long-term would be tracked on a monthly basis. Now we'll look at short-term because it's just 1 week since we discussed this. And also we had given risk levels for all those investments. That is, if suppose we are investing 100 rupees into a fund that we discussed, and if that fund does not go in the direction what we wanted to, that is, we buy a fund, it has to go up. Instead, if it starts going down, what levels we will get out of that fund so that we protect our capital? That is called the risk. So we will see how these funds, if we had invested, have performed. So these are the list of funds which we discussed, one each from Nippon, SBI and UTI. In SBI Pharma Fund, the buy price was at 141.8 rupees NAV. At that time, the protection was at 134.95. Today, the NAV of that fund is 145.54. It is gained by 3 rupees 74 paisa per unit, giving a 2.64% gain in just 1 week. And current protection level has moved from 134.95 to 138.80, thereby covering somewhere around 3.85 rupees of risk. Same for UTI Pharma Fund, we had a buy at 103.06. Their protection was at 97.95. The fund's current NAV is 105.11, making a profit of 2 rupees 5 paisa per unit. Profit is at 2%, close to 2%, which is the lowest among the 3 funds in 1 week. And the protection has moved from 97.95 to 100.15. Similar 2 rupees plus gain on the upside. So that risk has got reduced by 2 rupees on this fund. Nippon Pharma Fund, which was the costliest fund among the 3 which we recommended, was discussed to be bought at 186.21 NAV with a protection at 177.10. Today the NAV of the fund is 191.25. It is gained by around 5 rupees 3 paisa per unit at around 2.7%, the highest among the 3. The protection for Nippon Pharma Fund as of this week is 182.25. Last week it was 177.10. It has also gone up by 5 rupees per unit. If suppose someone had invested 10,000 rupees into the schemes that we discussed, how would that numbers pan out now? Let's look each and every fund. If the same 10,000 was put at SBI Pharma Fund, a person would have got 70.52 units to his credit at whatever NAV we discussed, 141 rupees something NAV was there. So risk per unit was 6 rupees 85 paisa. So for 10,000 rupees investment, the total entry risk was 483 rupees 7 paisa. That is around 4.83% risk. If suppose the fund, after we took entry at whatever price we discussed, went against us, we would have lost 483 rupees. So today on 5th of June, when we are discussing what is the value of that investment, that 10,000 has gone to 10,263.75, 10,264 we can say. The risk at this level is 211 rupees because the protection has moved up. Risk on the capital on the 10,000 that we invested today is only 211 rupees. It was 483, it has moved up to 211 now. Profit risk, that is from 10,264, if the position has to hit a stop loss, it goes against us and exits at whatever protection level we have, we will lose 475 rupees. Similarly, we have calculations for Nippon and UTI Pharma Funds. If you had invested into those funds, you can go through the details, what is the number of units you would have got, what is the risk we had, and what is the carryover risk now we are having on each of the funds. Let's look at the graph of how the performance has been. I have taken only SBI Pharma Fund. There is no discrimination of other two funds, just I took the and randomly I selected one fund. SBI Pharma Fund, if we had put 10,000 rupees last week when we had discussed, that is on 1st of June, that investment today is valued at 10,264. At the time when we invested 10,000 rupees, if suppose it had gone against us, what we would have recovered back, we would have got 9,517 rupees. We would have lost 483 rupees. This week, as the fund started moving up, if it goes against us, hits our protection level, we will get back 9,788. So last week, if after we bought, if it had gone against us, we would have got back 9,517. Now we get 9,788 rupees. So we will be losing 212 rupees from our investment. And from wherever the NAV is now, whatever that investment we made, it has some profits. From here, if it has to go down, on profit side, we will lose 274 rupees, 64 rupees, and on the capital, we will lose 212 rupees. Similar will be the situation for all the funds. And as we keep moving further, couple of weeks further, if this stock prices keep moving up, chances are this yellow line will start moving above the blue line. That's the place where we will have profits also get protected. As we keep moving further and further, more amount of profits will get protected if the trend continues to be strong. The numbers that we have discussed here is just for 1 week from the time we invested. We will track the progress as it goes along. For long-term investments, since it is tracked on monthly basis, though that investment too is positive now, stop losses have not moved up. That is, the protection is not moved up, it stays there only. At the end of the month, we will track that and see how that performance goes. As the trades get completed, that the positions now we have entered, which gets exited at later date, we will get to know whether long term was advantageous or short term was advantageous. If suppose the trend is strong, long term gives big returns. If suppose trend gets squeezed or probably something goes wrong against the trend and it gets cut off soon, then short term will give better returns. As of now, we don't know what is going to be the returns. We have just taken the strength of the sector and invested into funds which have good track records. This being the situation in the pharma sector, what are the other sectors that are good places to invest now? In our system, we have got metals, cement and automobile sectors showing strength. For the pharma sector, we know the reason why that strength has come up because of the pandemic. Requirement of medicine has become very high. Not only that, the man-made disaster of locking down ourselves due to fear, which has created distress, depression, loss of morale, more of poverty-stricken issues, then existing diseases not being taken care of, that is going to get escalated. So this has created a very big opportunity for pharma sector, while as of now we don't know what is the reason that metals, cement and automobile space is showing signs. In my assumption, what could be reason is probably the pandemic hit the urban space more than the rural space. So we had more damages on the urban marketplace, metros were hit more, whereas rural did not have much of infections. So when the bounce back happens, probably the markets expect that rural demand will pick up in automobile, because rural automobile sales is more beneficial than the urban auto sales now, because two-wheeler sales is likely to be very good there. Even the stocks that have come up in automobile space shows that rural trend is kind of showing strength. And maybe there is home construction also happening in the rural space. Since people are moving away from the metros to tier 2 cities, those who wanted to buy houses in metro cities where they were doing their jobs, because of the work from home culture that is coming up now, people are moving away from urban cities. Could be a reason that they will build their houses in their own hometowns. That can propel the home construction space, which has triggered the strength in cement and metal space. So these are the list of stocks that are showing strength in all the three sectors. Among the uptrend stocks in each segment, in cements, we have India Cement, Ultratech, ACC and Ambuja Cement. You can see all the big names are there. In auto space, like I said, more on two-wheeler side, Bajaj Auto and Hero Motors on two-wheeler space. Escorts and M&M are probably on the tractor space. Again, it is rural. Eicher Motors Seriously, we don't know what is the reason why Eicher Motors is showing strength. Probably Royal Enfield Bullet sales can be good in the rural markets, because urban markets Royal Enfield Bullet sales is got saturated. Motherson Sumi is a automobile ancillary business, one of the top among the ancillary businesses in our country, and that is also showing signs of strength. On the metal space, Steel Authority of India, Jindal Steel, Hindalco are as of now showing strength. Soon the patterns are like maybe Tata Steel, JSW Steel are also coming up in strength. Soon they will also turn up. So these are the stocks that are showing big strength as of now. Mutual funds having exposure to all these stocks which we showed as strong ones can be looked at for investment, because these funds will have strength on their NAVs, they will start going up. You can also look at investing into schemes which have more exposure to a bunch of all these stocks. We will be coming out with a list of funds which is having more exposure to these stocks. Not only individual, we will combine every stock and see which are the schemes that have combined exposure of strong stocks in it. That is the place where we can invest and reap some rich rewards in the coming days if the trend continues. So all of this is going with the belief that trend will continue for a couple of months from now. Of course, in my belief, market will not hit a new high at least for another 11 to 12 months. There are a lot of talks happening in the media that India will have a V-type recovery. If that is to happen, then bottom is not yet formed for our market. We are likely to go down further. That might happen over a little, maybe 2 to 3 quarters time. As of now, results that are coming up, like SBI result came up last 2 days back. It was fantastic on the number side. While if you go deeper into it, we'll see that that number came because of the sale of some other business. So general businesses all are weak, and they have also given indication like the September results will be bad for all those companies. So which will show up on the prices also. Till that time, there is going to be uptrend, and these sectors which are showing up strength will be doing well. That is the expectation. If you are looking at investing into individual stocks that are showing up on this list, what we showed, please do it with right appropriate risk levels, because you need to have capital protected in case market goes against us immediately. We should have protection on our capital so that we have capital to participate in the next uptrends that come. When COVID pandemic came, market drifted around 35-40%, and we have recovered somewhere around 25% from that bottom, like that. And it's given us opportunity to invest now. Similarly, we will have opportunities coming up every time. So we will not know when the market will turn against us. So have protection for investment. For mutual funds, we are giving stop losses on our website for all the funds which we track and talk about in the videos. If you are wanting to have ideas on the stocks, please write to us, to our mail or on the comments. We will add you in our group, where we give ideas on stocks, individual stocks which you can use to invest and benefit by trading. So thank you, happy investing. Pharma space is going to run for at least another one year plus. Invest and enjoy happy returns.